Welcome to Wall Street Confidential, the show we give you the inside story as to what's really happening on Wall Street. I'm Greg Greenberg. This is Jim Cramer. How's it going?
Oh, good, Greg. How about you?
Not bad. All right, listen, we finished up the first quarter, and in that first quarter, we had 67 IPOs versus 56 last year for $11.9 billion versus $10.7 billion. It's a pretty good quarter for the IPO market.
The market's up very big. I've read all the articles, and the articles all say this is another mania. Now, if you look at the deals, the mania deals, so to speak, are all awful, and no one's buying them.
Well, about a third of them are not profitable companies.
Right, but they're not doing well. It's not like there's always a presumption that we're at a peak when so many unprofitable companies are coming public. Look at how the unprofitable companies are doing. They're dogs. Nobody wants them. This is very different from 1999, 2000, where the less profitable, the better.
Oh, we could talk about Clearwire, which was a big IPO.
McCall made a lot of money for people. So, look, they priced it wrong. They put it in the wrong people.
It's down about 20% from the 25 to 20.
But if you bought McCall, I think that the chance to participate in another McCall is worth the downside, is the way I would look at it.
Okay, another big theme in these IPOs, the first quarter, is blank checks.
Well, those are all bad.
You buy something and say, buy a stock, and they'll say, listen, we're just going to buy the portfolio later. Just trust us.
Well, I mean, the SEC just has always maintained a hands-off policy about whether these companies should go public. The idea is that someone should be warning the public that these are bad, but I don't see anybody other than us doing that.
It's a shell with nothing in it.
Yeah, well, there's no reason to participate in these at all.
It's like a cannoli with no filling.
Yeah, well, I mean, everybody has to recognize that there is no gun to your head to buy these IPOs. The ones that aren't profitable for the most part stink. So don't buy them. The ones that are profitable are interesting.
But here's the question from a market standpoint, going into the second quarter, we're going to have to digest a lot of stock?
Let's go over let's use the Omniture deal as the best. The Omniture company is a company that is, it reminds me very much of Akamai, okay? If you're going to do streaming video, you want to know where people are watching the streaming video, and it gives you real time. The company did not report a profit. I think that the company could be gigantic. Now, is that a mania company? No, I think that you get in a chance to be able to buy the company before it hits it out of the park, which is really what you want. If you wait until these companies are profitable, and many of these will be profitable next year, you're going to pay much more. That's the way of capitalism. And I think that people really have to understand and be a little more sophisticated. And don't believe the articles which say there's a mania. Just believe the articles which say this company's better than others. This is not a monolith. The IPO market is not a monolith. The blank check companies, forget them. Companies that are losing money really big that don't forecast profitability in 2008, 2009, forget them. But, by all means, look at the companies that do.
All right. Forget about those blank checks, unless they're made out to cash and to me. Jim Cramer, Greg Greenberg. It's Wall Street Confidential.